You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-popular Options Insider Radio Network. 13 programs on the old network, including well over 100 hours of volatility views goodness. Where can you find all that volatility goodness? Well, of course, on the mothership, theoptionsinsider.com. Surf on over, click on the Insider Radio Network tab, and you're off to the races. Of course, we don't mind if while you're there, you surf around a little bit too. You check out the unusual activity. We do a lot of that on the website, so check that out, as well as, of course, all the other programs on the network and the breaking news from the options market. A lot of education, analysis, all sorts of good stuff going up there on the old website. So if you're into some options information of whatever type, education, analysis, unusual activity, whatever the case may be, surf on over to the mothership. I think you'll like what you're going to find. And of course, if you're into the radio, you can also find it iTunes, Stitcher, TuneIn, pretty much anywhere audio is available these days, including via our own app on the iTunes, the Google Play, and the Amazon App Store. So no shortage of ways for you guys to find our stuff and take it with you wherever you may be. Then, of course, while you're listening, or maybe afterwards, shoot us your questions, your comments, your insight. We love to hear from you guys. All right, and joining me on the old program today, my volatility nemesis himself, the greasy meatball, Mr. Mark Sebastian from OptionPit.com. How goes it, sir, my volatility nemesis?
That's because I'm always right on volatility and you're always wrong.
Maybe that's because you're such a diehard volatility buyer and I do not but sell volatility. Was that how it works?
Well, that's what I'm known for. Yeah.
Degenerate premium buyer that you are, sir.
I'm a premium whore. That's what I'm known for. Yeah, it's good to be here. Good to see you. All is well. How's the world treating you, my friend?
The world is treating me well. I'm ostensibly on vacation, yet I somehow find myself on all these shows throughout the week. So it's just very much a vacation in name only. And it seems like you have survived the apparently apocalyptic weather that was sweeping through the Chicagoland area this week.
Indeed, I did.
I wouldn't know because I've been in sunny and tropical land of Mickey for the past week or so. Mm-hmm. All right, and with our weather update.
Nutty.
Yes, I saw the pictures. It did look pretty crazy. When the tornado sirens are going off, you know things are crazy. Luckily, Options Insider HQ still standing, so we're able to bring this fine program to you. And without further ado, let's dive right into it. It's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, and welcome to the Vol Review. This is indeed the portion of the program where we break down what was moving, what was shaken in the week that was from a Vol perspective. And for you playing the home game, we are recording this on Friday, June 19th. You're probably hearing this on the following Monday or whenever you choose to tune in. We welcome guests weeks, months, even years down the road. We know a lot of you guys like to tune in down the road or check back in on earlier episodes about something we were talking about then. So by all means, welcome. And as we are recording this, it's a bit of a mild sell-off on the street. Most of the major indices off about a quarter of a percentage point or so on the day. So nothing particularly dire to concern people with, certainly not compared to some of the movements we've seen of late in the marketplace. And after coming off aggressively after yesterday's rally, VIX cash ticking up a little bit going into this expiration Friday weekend here with the VIX cash up about 0.2 of a point or so here to about 13.38. So that's where we are as we are recording this. And of course, it was a big week out in volatility land because it was settlement and expiration week for the VIX as well. Mark, I know the VIX settlement process, the procedure is fraught with controversy. It seems like they can't pick any number any month without a lot of hand wringing. What was your take on this month's number where June settled out here at 14.67?
Kind of an odd week, really an odd week. I think a lot of people were shocked at the big, huge vol sell-off that we saw on Thursday and after the Fed. It was just kind of a crazy pop. And then the market has just kind of snoozed through the Greek stuff. Apparently, the idea that there's this logic, what is it, the reasonable put they call it, or that all parties will be reasonable, it continues to be the going concern for right now.
Yeah, it seemed like the Greek thing, it's on again, it's off again, it's the end of the world, it's nothing. It's kind of been a bit of a weird dance to watch this unfold. We joked about it a lot on our last episode of the option block, as well as kind of being a bit of a farce what's going on over there. But c'est la vie, still moves markets, and as I mentioned, this was indeed, as is expiration week, that means it's settlement week as well, and it does seem to have settled a little bit on the high side for some people who are, of course, seeing what's happened post-settlement, which is pretty much VIX has gone essentially straight down, except for today, of course, getting a little bit of love in the number today, but still well off. We are hovering in the VIX cash as we record this, listeners, right around the low 13 handle, 13.3, 13.4. So well off our settlement level of 14.67 earlier this week, and that seems to be the case. Whenever they pick a number, it moves inevitably and invariably away from it as fast as they can. There was a lot of vol coming off across the board. Of course, saw the VIX Futures ticking down to about the low 15 handle for a while there as well. I think they hit about 15.15 towards the middle of this week, and just a lot of interesting stuff cooking across the board as we wind down the month that was from an options perspective. Speaking of volatility and options, as is typically the case when we get into the end of the expiration cycle here, the vol through the roof, particularly from a VIX options perspective. This was one of the busier weeks we've seen in quite some time, and including a week that didn't include one of these weird 1x2, 1x3 call spread swaps, which seems to boost the numbers all over the place. Didn't see that this week, but we did still see a lot of volume out there in the VIX options, with most days, I think all days actually, over 500,000 contracts, and getting into the expiration, the settlement, of course, settlement 1.2 million contracts on that day, 700,000, some 800,000 contract days. So a fairly robust week from a volume perspective, and that's kind of to be expected going into this part of the cycle. But on the flip side, we haven't seen it as robust in recent months as well. So perhaps the worm's starting to turn there, Mark. You think people are starting to perhaps rediscover volatility in vol products and starting to put some volume on again? Or you think this is just a one-off aberrant blip coming into the settlement, and next week it'll be back to the 200,000s again?
No, I mean, I feel like I think there's definitely been a risk on. I think it's been so safe to be risk on for some period of time as kind of we bounced around and volatility didn't do anything. Now I feel like people are, this might have basically something to do with people being willing to kind of step back into the market. I think part of the reason why nothing happened was that we were all in, a lot of the world was in cash. So, that's just something to think about. I mean, if nothing's going on, then nothing's going on. You can't force that to happen. You know what I mean?
Yeah. For a while there was no paper to force anything anyway. It really was just a kind of a wait and see game. Now we're starting to see some of that paper, at least for the near term, returning back into the space. Of course, as it is wont to do out there in vol land, that paper kind of one directional yet again. Mark, we're starting to get to that point where I'm seeing the drumbeat again across a variety of outlets when it comes to the call heaviness of the VIX index. You'll remember the last time we flirted with these levels around the 4 levels. Right now it's about 3.9 out there in VIX option open interest calls over puts. When we got to around this level is when the drumbeat really started coming out again. They're saying, hey, VIX is getting too call heavy. Something is bound to move. We're starting to see that again. We're starting to see people out there saying, hey, this is starting to get crazy. These levels, we haven't seen these levels in quite some time. Some people saying not since last September have we seen it this high and yet nothing has happened. Or some people saying this is the inevitable precursor to some dramatic market event. And of course, there's the contrarians out there saying, this is kind of much ado about nothing. A lot of these calls that people are gobbling up are kind of cheap money calls. They're not really high vega, not really high dollar calls. They're kind of just a bet hedging against kind of the worst coming to pass, or flipping the script, maybe a cheap lottery ticket, and so you shouldn't read too much into that. Where do you fall on that end of the spectrum? I know in the past you've kind of been dismissive of the VIX call to put thing. Has your viewpoint changed, or you still think it's kind of a lot of noise?
I'm extremely dismissive. Although Jared was out with Jared, our formerly of this show, was out with a note this week that I thought was fascinating, and he was talking about how the volatility of VIX is a better predictor of market correction than the VIX itself. And basically because VIX traders are smarter. And, it was really a fascinating read. And if you guys are out there, search that from Jared's research at BGC Partners. It was a really well-written piece. And to the point, when you see VVIX rallying, there's a far more likelihood of something bad about to happen than VIX rallying itself.
That's an interesting point. I'll have to see if I can pull up that paper while we're talking here on the show so I can recommend the exact title for our listeners. But of course, listeners, you can always, you have a little bit more time than I do on the show. You can surf on over to BGC Partners and probably find a lot of that, at least the abstract, for yourself. And since we're talking about VVIX, of course, it has had a little bit of a pop of late over the past week. It's gapped back up into the 90 handle range again. We saw it hit as high as, I believe, about nearly 98 at one point. Now we're hovering right around the 90 handle yet again. Some vol of VIX creeping back in there, Mr. Sebastian. So perhaps Mr. Woodard, our erstwhile co-host, when he can get on the program, is on to something there. Maybe there's a lot of noise in the VIX call put, but the VVIX doesn't really lie, does it?
No, it does not, apparently.
Well, talking about the paper we saw out there in VIX options land, continuing that thread, one of the reasons the call to put is so heavy is because everyone and their mother is out there buying calls. We saw just a flurry of July call buying this week. Yet again, 100,000 of the July 26s going up 50 cents. July 24s gobbling those up for prices around 50 cents as well. Obviously, there's different days, different sessions because the underlying was whipping around there a little bit. We saw some people starting to leg into verticals. This call flurry is overdone. People are bidding up this stuff to astronomical levels, and we're just gonna sell two of the upside. Now that comes with some inherent risks. If indeed all this call love is on the right side of the fence, then you might be wearing that 1x2 pretty aggressively in your face pretty quickly. But if it doesn't, then of course it could work out for you pretty well. We did see some well-timed closing trades out, not closing, opening actually, but well-timed opening trades out there in June going into expiration as well. Mark, someone coming in, one call seller this week blasting out a ton of pretty deep stuff. June 15s, kind of betting on settlement going his way, and it worked out. It settled at 14.67, so he blasted out a ton. I think the numbers were somewhere 60 to 70,000 of those right ahead of expiration for prices in the 50 to 60 odd cent range. So that worked out pretty well. Nice half a buck, 50, 60,000 times. He probably was gritting his teeth a little bit going into the settlement process, but it worked out pretty well for him. Was that you by any chance, sir?
Oh yeah, I'm known for settlement plays. I've always thought settlement plays are maybe not the, there can be some ways to take some pretty nice targeted bets on settlement, but you got to be somewhat careful,
somewhat judicious. Yeah, you're saying blasting out a ton of essentially at the money calls right around settlement, not perhaps the most judicious use of the capital.
Yes, exactly.
It is amazing sometimes people can amass obviously a lot of capital to invest with sometimes interesting risk controls and risk parameters, sometimes none at all. And yet they still are able to amass some capital to put to work, which is interesting. Other verticals we saw out there, I think the 1520 was one of the ones that caught our eye as well. So a lot of just tons and tons of July pretty much call buying, and people taking advantage of that to leg in to some verticals and some aggressive 1x2s as they're starting to see, this thing is getting a little bit overdone here. We don't think VIX is really poised for any sort of elaborate move to the upside, and all of these people bidding up these calls are making some interesting opportunities. So there you are. If you're interested in perhaps legging in, I probably would lean more on the vertical side of the fence than the 1x2 side of the fence. I'm not a big fan of being naked short a leg to the upside on VIX, and you never know when this Greek thing could spiral out of control or something else could happen to send us well into the mid-20s again. It wouldn't be that out of the realm of possibility, and people doing these weird 15, 20, 1x2s and other things like that probably may regret that. So should that come to pass. Of course, moving away from VIX land into VIX-related land as well. We've been chatting quite a bit of late on recent shows, Mr. Sebastian, about the latest addition to the VIX ETP ETF spectrum. This is, of course, the infamous VIX Up, VIX Down product, and it's been a subject of some debate. What actually is it doing? What is it purporting to do? All the other fun stuff and how it's actually tracking the products. VIX Up has clearly been where the lion's share of the action has been and where a lion's share of the volume has been. As we stand today, about 11,000 going up in the VIX Down versus about 43,000 shares going up here in the VIX Up product as well. I know, like we've talked about in recent episodes, Mark, this product not exactly perhaps delivering what is anticipated, but still doing some numbers, doing some volume. What's your take on how it's performed through this first expiration cycle here? So what's your take here on how it's been performing so far?
So far, not so hot, unfortunately, for the VIX Up, VIX Down people. It has not worked out very well. VIX Up is not tracking VIX itself very well at all. VIX neither is really performing. And, you don't have that contango issue, but you do have it dropping on the 15th, paying a dividend from 28 to 20.5 on the 16th. So nice little dividend that you've already paid. And it just I just don't see it. I don't think it's working, unfortunately.
Yeah, I mean they kind of build that into that product with those dividends to try to incent people to play both sides of the fence. So far, you're right. There has been some money flow, but not a lot of interest still in the VIX Down product. We'll keep an eye on these. As we said, this is the first kind of expiration cycle we've seen these roll through. We need to get a few more under our belt to really to say for certain what's going on out here. And like I said, we do want to find a time that works for everyone, and we'll get them on the show so we can hear their side of what's been cooking out there. Speaking of things cooking, people are always writing in saying, hey, look farther afield than just what's cooking here on domestic large cap volatility. And some of you have written in asking about VSTOXX in the past, so we added into our rotation, and we did see VSTOXX hitting a 5-month high back on Monday. As you might imagine, VSTOXX very sensitive to what's cooking out there in the Greek debacle development, whatever you want to call it. And Monday, of course, being kind of the crux of that issue from a vol perspective, hitting a 5-month high of about 27 0.75 on Monday. That was ahead of the big emergency meeting there, has since kind of trailed off as most of the other vol products that have post that meeting. Some interesting stuff as well. We have seen some people looking at and also writing in about potential VSTOXX versus VIX spreads. We did see those spreads. If you look at just pure implied vol of each and where they're trading of each, really starting to widen out a bit again towards the earlier part of this week, particularly with VSTOXX hitting that, that crazy aberrant high there on Monday. So as people are looking farther afield for some other vol related plays, VIX versus VSTOXX may be an interesting way to go. Of course, VSTOXX nowhere near as liquid on that end, so you may have some execution risk, may have to pay up a little bit or sell through on a little bit to get some stuff done there, but still an interesting stuff. Mark, does this catch your eye looking at I know you like looking at things like NASDAQ versus VIX, and of course VSTOXX versus VIX, another interesting play.
One of the comments out, there's a few people noticing that the spread between VSTOXX and VIX is crazy wide. I'd somebody liken it to kind of VSTOXX is trading kind of how we were trading ahead of the fiscal cliff, and that appears to be kind of what's going on in Europe, because it's not like the DAX is off some, but it's not like it's had some crazy dip to warrant this the VSTOXX move. But that the spread between VIX and VSTOXX is super wide, and I think that could be one of the major issues that we're seeing there.
If history is any indicator, we saw the volume in RVX really tick up when the Russell vol really diverged from VIX, and now that VSTOXX is doing that as well, it might obviously attract a lot of spread traders who may see some of the volume tick up out there in VSTOXX as a result, and that could of course lead to some more lasting paper out there, and perhaps make it more attractive for some of our friends listening to the show who want to more actively spread those two back and forth. I know for a while there, particularly when both VIX and VSTOXX were kind of languishing, it was very hard from a volume perspective really get a lot of good stuff off. Now that the spread is widening, VIX is taking off, VSTOXX less so, but still doing well from a volume perspective, then perhaps there are more liquid opportunities to take advantage of, rather than mark something just some theoretical aberration popping up on your model and you deciding you wanting to try to take advantage of that.
Yeah, I mean it's interesting. I mean, when the volatility between kind of the major indexes and worldwide volatility correlates better kind of to each other than the indexes themselves do. And so when those get kind of out of whack, there could be some decent spread trading. That's why, I think every vol trader in the world would like to see a name like RVX or a VXN start to pick up, because there are a lot of people that think they can make a lot of money spreading them all off of each other. But we just need a customer to step in and really get into it. So if you are interested in trading vol and Russell or NASDAQ, there are people who will take the other side. Just putting it out there, folks.
Yeah, speaking of the RVX, I was talking to those guys this week, actually, the Russell folks, and they have a lot of cool stuff that they're cooking up internally. In fact, they sent me over a few internal white papers that they're working on for a lot of interesting use cases that are developing with that product, and I was sworn to secrecy. I can't discuss them yet on the show, even though I asked them very nicely if I could. But they want to wait and hold off until they've had a chance to, peer review it and everything else. But they have some really interesting stuff cooking out there for who should be using this, who is using it, what use cases they're seeing for it, and what are some interesting trading strategies that could work for it, and a lot of interesting, cool stuff, use cases that are kind of making themselves apparent. So hopefully we'll be able to discuss that fairly soon, maybe even on the next episode, we can talk about kind of some of the interesting things they're seeing developing out there. But for now, I'm sworn to secrecy, a bit of a tease. Hopefully we'll be able to get to that soon. The other aspect of the vol spectrum, Mr. Sebastian, that is, of course, capturing a lot of people's mind share and attention these days, is coming not so much in the equity space, but indeed in the crude space. It kind of has been the vol darling for the last 6 to 8 months. Really, that's been where a lot of the vol action was, particularly when VIX itself not really doing a heck of a lot from a paper or from an underlying movement perspective. Crude was still rocking and rolling. We have seen crude vol, of course, settle off a bit in recent months. OVX and OIV both hovering around 30.5 or so right now, well off their recent highs. They got into, I believe, into the 50 handle, if not even higher. So that was fairly aggressive peaks out there. And of course, they have since come off very aggressively. Actually, OIV hit a high of 71 back in February, so that we're well off those highs now.
Yeah, crude is the vol sale of the year, and continues to be.
Don't tell Goldman that.
Yeah, I mean, I don't know what those boneheads were thinking when they wrote that. I mean, that was just the silliest thing I've ever heard of in my life. Gold vol is probably oversold now at this point, but I think the OVX is going to go, right now as we speak, OVX is about 30. I see it going to 22 before it finally gets kind of maybe some support and stops running around. So that would be my approach.
I'm looking here to see if I can pull up again which strikes in particular they recommended, so we can see how that trade has performed. It's been a few weeks now since their big buy downside trade came out. Certainly from an underlying perspective, it hasn't worked out, and even from a vol perspective, it hasn't really been the winner perhaps they were hoping for. So yeah, if you did follow on the heels of that paper and say, you know what, I agree, the vol is dramatically overpriced out there. The underlying and indeed the realized volatility out there in OVX, I don't care where you're looking. If you're looking at USO, you're looking at OIV, you're looking at WTI puts, wherever you're looking, you're not really getting a lot of love for those right now. Looking at interesting stuff though. Speaking of spreads, before we don't talk a lot about the WTI Brent spread, but it has narrowed quite a bit. The average spread was nearly $5 back in May. As of June, it's been averaging around 320 or so. So it's come off quite a bit, indicating some interesting developments out there as well. Perhaps we should delve in more in a future episode into some of the interesting things that are cooking from a commodity spread perspective, and where we could perhaps find some interesting opportunities from a vol perspective out there. Of course, WTI and Brent both coming off from a vol perspective, so from a vol spread perspective, perhaps not as attractive, but still a lot of volume really piling into that WTI Brent spread, tightening it up quite a bit. Something worthy of note, something we could discuss perhaps on our futures options roundtable show there on the network. But as we move on, some other interesting things that are cooking out there. I think before we dive into some other aspects on this vacation truncated episode of Volatility Views, I know the other area that's really been exhibiting a lot of interest from our audience, from our listener perspective over the past few months, certainly from a vol perspective, has been out in the rates land. I know, Mark, you are a big fan of TLT. We're seeing the vol out there in TLT kind of hunched for the last few weeks or so, hovering around a 15 on an Aug vol perspective. So we haven't seen as much action out in that name from a vol perspective as perhaps you might have seen. But I know that's one of your favorites. What else is catching your eye out there from a rates vol perspective, particularly now that we're post June at this point from a Fed perspective?
Rates have been moving around, and it does not. It's not like things are too cheap. I feel like, while we're kind of at this level, maybe things will slow down a little bit, but TLT and VX TYVIX now, those are bouncing around. I do not think that, I absolutely think that if anything, TLT vol is probably too cheap, because the stock, it was down 1% yesterday. It's up 1% today. So, I mean, that thing's been flopping around.
Since you invoked TYVIX, I almost called it TVIX. Different product entirely. But since you invoked TYVIX, we do have a listener question about that. So I think without further ado, let's dive right on into our volatility voicemail.
It's time to welcome thought leaders from throughout the volatility trading world. It's time for Volatility Viewpoint.
All right, and welcome to the Volatility Voicemail. This is indeed the portion of the program where you guys take the reins and fire off your questions, your comments, your insights to share with us as well as with your fellow listeners here. And since you mentioned TYVIX, Mark, we have a question maybe from one of your friends, relatives, I don't know, handle Tasty Meatballs. So maybe they're a friend of yours. Maybe they just like a good meatball sandwich. I don't know. He or she.
That's actually so I'm the greasy meatball. My wife is actually Tasty Meatballs.
Ah, there we go. So she's writing in. She's queuing you up with some questions here. She writes, what is your take?
I told her to send that in.
What is your take on the new TYVIX index? Disseminated by the CBOE. You know, Mark, ironically, we haven't really discussed this much on the program. This is kind of course, their new Treasury Vol Index. If you've been following the home games, what the CBOE has been doing, they've been launching pretty much VIX on every asset class, every underlying under the sun, hoping to recapture some of that lightning in a bottle that they captured with the VIX mothership product itself. Some have done well. Some, like some of our other products we've discussed here on the show, like the short-term VIX and others, haven't really captured the minds of the audience out there to be charitable. But TYVIX, a newer entry, it would seem to be well-timed from all of a sudden rates coming to life from a vol perspective again and becoming an interesting category after having kind of been dead money for the better part of the last half decade or so. So it seems to be well-timed. Some questions about whether these TYVIXs, and there's different characterizations, there's TYVIX 1, TYVIX 2, et cetera, how well they actually do at translating that vol into some sort of disseminatable product, tradable product. Mark, what's your take on these in terms of, it's been a few months now, we've got to see a little bit under our belts of how they perform and how they react to different scenarios. What's your take on how they've been doing so far?
I mean, the futures aren't trading, but the index does a pretty good job of tracking.
Yeah, they're disseminating the index right now.
Yeah, I don't mind. I have no issue with the index. It's done a pretty decent job of of kind of moving with the way rates may or may not move. It's been pretty good. So I mean, it does its job. Too bad the future doesn't trade.
Yeah, the future. It's one of those things where they announce a thing a while ahead of time, and they have to get approvals, and then the futures eventually come along first, and then if all goes well, the options as well. I think we're still playing the wait and see game for most of that stuff. But yeah, I think the summation there for your wife / Tasty Meatballs is so far so good for what we've seen, but we haven't seen a heck of a lot. We do want to see kind of this product kind of out in action in the marketplace, really lighting it up and slinging it up and seeing what the use case is that the market kind of adopts for it before we can really render any judgment on it. I think, Mark, I'm not alone in saying that there's been a lot of products I've seen launched that I thought were going to be home runs from a vol perspective. I thought the gold VIX, I thought the oil VIX, I thought for sure that the
gold VIX in particular, I thought was going to be a winner.
Yeah.
And then I think we all thought that the VXST was going to be a hit, and they both were massive. Well, I mean, VXST, of the attempts, VXST was the closest to actually having interest.
It had a few days there where it traded, yes. I think.
But it's since stopped trading. There's no options on it anymore.
Yeah, they've kind of obviated it now with the encroaching of VIX weeklies. The VXST doesn't really have a place in it, and it's kind of been delisted as a result. They're not really listing a new series.
Hit the bricks, we don't need you anymore.
You're right. So I've kind of given up on the will they, won't they, volatility succeed product guessing game because it does seem almost so random at this point.
Yeah, the answer is probably won't they. Most of the time.
Yes, you're right. If you short premium on all launches of volatility related products, you're batting. I think you're batting 99 out of 100 at this point.
Yeah, you have one black swan and a lot of.
Yeah, you got VIX that blew you out of the water, and then the rest you probably did pretty well on for the most part. So yeah, it is kind of a weird thing. What will capture the mindset of the audience out there? They seem to really like VIX and S&P 500 implied vol, and anything else far afield from that or any other derivation they're in. So far, they haven't really glommed onto. We'll see if the Treasury VIX is the asset class that finally can perhaps break that model, break that track record. But so far, like I said, we don't have any real data points to look at aside from just the index that they're disseminating right now. And it looks nice, but things look nice.
I think that they would certainly the TYVIX, which trades on CFE. I wonder if they would have done themselves a favor if they cleared CME instead of CFE. Instead of one, if they traded on CME, maybe not. But if they cleared CME so that there was at least some margining against, I don't know, an options portfolio, that would be valuable.
You know, they have done those partnerships with the CME in the past, though. I believe
this
the gold and the crude were with them, and that didn't really translate into any appreciable volume.
No, it didn't. But, because, it's crude option. But the issue with crude is really the crude options that, that should have been on NYMEX, not even CME, right? So
potato at this point.
Place it where the traders are. Don't. And, the guys that are hedging Eurodollar and, and 10-year note vol should be it should be there. And actually, here's a question. How come they didn't, if you look at all of the optionable contracts in the world, right? What's the one non-equity product that does more business than any other product? Right?
Yeah.
Eurodollar options. I believe those even exceed SPX in terms of volume, don't they?
They on some days definitely, yes.
Yeah. So why have they? At what point did they just say, hey, let's skip this really active contract? Because think about it, the one contract that's been really successful has been what amounts to essentially the largest equity option contract in the world, right? Then they don't go after the largest index product. I mean, this just doesn't make or interest rate product. They go for the 10-year note, which is like maybe the third or fourth banana in that whole trade.
But there've been so many question marks there. I mean, I think all of us were excited when they announced a few years ago they're going to do things like an Apple VIX. It seemed like a great idea at the time, single names, and yet that never took off for lack of an underlying and a variety of other issues.
That was even less successful than those alpha indexes. Remember those?
Yeah, well, at least alpha indexes traded. You never could trade a single name like Apple VIX. They never launched them. It's always been in that theoretical dissemination phase. But the alpha indices they did actually trade. It wasn't a lot, but they did trade for a short period of time.
And I actually would encourage them to expand that calculation, because at a minimum it increases interest in options themselves, makes options analytics better for kind of the world. When you've got with the one thing that I run into people that I use like live vol for analytics, right? And not everybody has a product like that. The one value of like VXGS or VXAPL is now people can pull up that ticker signal and quickly look at where Apple volatility is, and it can actually assist in buy-sell decisions. It's not a bad index.
No, it has value. I mean, look at what OX did with it with their Idea Hub. The entire thing is driven off the single name VIXs that they disseminate. So it has seen use cases in the marketplace. So I bet you a lot of listeners out there may not even know that if they're using that Idea Hub for premium harvesting or whatever, that they're actually trading off of essentially the VIX that's being disseminated on those. So it has seen uses in the marketplace. That's why I think if it ever actually launched, it would have been a hit.
I don't know. It would have been interesting. Volatility. It would have been an interesting trade. A future would have been a really, really interesting trade. Watching those things flop around around earnings.
Yeah. Well, yeah, around earnings, when the skew gets crazy, what would have gone on with that single name VIX? How would it have taken into account the skew? We know how they do it with the SPX options. Would they do the same thing? Probably. It's the same methodology in the single names. How would that translate? Because the skew gets a little bit wonkier in some of these single names around earnings time than you're gonna see in the index.
Think about this. There was that period where if you traded into earnings. In Apple, there was a couple earnings where the vol wasn't that high, and then after earnings, Apple took off and the volatility took off at the same time, and you would have had crazy trading in that. You'd had all these people dumping Apple vol ahead of earnings, only to get completely run over by Apple rallying and volatility rallying with it. Just craziness.
Yeah, some of the height of the Apple heyday there when it was pushing 700. That's when Apple skew was something to behold.
Yeah, I had a fun little experiment yesterday on Twitter where I said, am I the only one that thinks the Apple Watch is going to be a bit of a flop? And people are very protective of Apple.
You're hitting them where they live, Mark. They don't appreciate that.
No, so it's, then I went out and said, find me somebody that's a trendsetter and that's worn a watch. So the first two I got back were from the Twitter user was he sends me Carlos Santana and who were the other two? It was sends me Santana and Pharrell, and I said, and this was at LAQRR. He sends me Santana and Pharrell, not trendsetters. Then he sends me Beyonce, and I said, okay, there's a trendsetter. And then he sent me Kanye, and in my opinion, that's a step down. So.
All watch wearers. Well, we talked about it yesterday on the option block, actually, that they're making money on the watch, but on the bands. They're selling a ton of bands. Apple and their step-up accessories, not to turn this into the Apple show, but they sold about 2.8 million watches, and they have a very good attach ratio on the bands with that. So people are buying tons of overpriced bands. So if they weren't making money on the watch, those add-ons are certainly pushing them into the plus category there.
Yeah, well, I just wonder whether, is 2.8 million, where's the growth there? And, there's a lot of competition in that. Fitbit is a nice product.
Just went public this week. I can't wait to see the options on that one. It's going to be fun.
Oh, that'll be a fun one. Yeah, well, I'm still waiting on Shake Shack so I can buy puts.
Yeah, everyone is, I think. I didn't look at the float numbers. Maybe I should have when Fitbit came out to see if they're going to qualify out of the gate or if it's going to be another one of these ones we have to wait for 6 months to get our hands on options. Hopefully not.
Those Shake Shack people, they smartly did that so that people can't buy puts on them. I just don't know, this is not going to be an Apple show, folks. Don't worry. I just get a bad feeling that, one, they sold most of them in Asia, and, I don't know how far that's going to go. And then two, I just don't know that it's going to be one of those things that really grows. It's a Casio watch. It's not something that looks great with a tuxedo. Or you don't wear a watch with a tuxedo.
For all your Bond nights out on the town with your martinis.
It's actually improper to wear a watch with a tuxedo, but with like a really nice suit, you could wear a watch and you'd look pretty sharp. I'm just not sure the Apple Watch does that.
I will say I have been in the smartwatch camp for the last 6 months or so, and I have found it to be of an interesting use case when you're walking around and you don't have to check your phone to get all your notifications. That's kind of nice, the other stuff you can take or leave it, but having that, so there is a use case for it. Whether the Apple Watch is the one you like, that's up to you.
Yeah,
but
and if I think if I didn't have to carry my phone with me, it would be a lot more use case.
They do have those. They do have. I find not having to remove your phone.
They're probably on Android.
Yeah, they are. I'm an Android guy, and a lot of the not having to remove your phone from your pocket all the time, very useful. Particularly Chicago winters get a little chilly. You got gloves on, you got your phone deep down. You don't want to check for everything every time it goes off. You can look at your watch. If you're driving, it's much easier in that sense. So I found that use case. So there you go. That's my check mark for the smartwatch thing.
Now, before we go off the rails, let's move on
to another question. Since we had a question about so the answer to the last one to your wife was we still don't know yet about the
Tasty Meatball,
the TYVIX. You're gonna start calling your wife that now, and she's going to resent it and or me, and rightfully so.
Here's a tip, folks: don't call your wife a meatball.
All right, since we had our other friend asking about products, we have a question now from Jarvis. So maybe this is a butler, maybe this is Tony Stark's robot. I don't know. He or she writing, this is for the Volatility Views radio program. So you sent it to the right one. Well done. There are a lot of players entering the volatility ETF world. Some offer ratio products, inverse products, or the new wave of spot products. I'd like to know if there is a certain type of ETF or a certain area of the market that you think is ripe for a new volatility product. What interesting question, Jarvis. I think that's a good one. We kind of have debated the shortcomings of everything that we've seen out there so far. We just talked about the VX up, VX down, not really delivering on the promise that it launched with or it was announced with about a year ago. We had the Nation Shares guys on talking about their thing, which is kind of a very limited, VIX without the skew. We of course have a lot with the real vol guys and the VolX guys talking about the realized volatility product. We still have yet to see those in the marketplace again post the contract on the euro. So we'll see how those unfold in the marketplace. There could be some interesting opportunities for that because literally no one is playing in that space. Mark, when I think back to this, what I think is interesting to me is kind of what caught my eye about the initial announcement of the VIX up, what became VIX up, VIX down, that they didn't deliver on. That's what attracted me, and I still think is a huge opportunity in the marketplace. I don't know if theoretically it's possible to deliver it, but I think it is very, very intriguing, which is that use case we kind of talk about all the time here on the show, that particularly a large amount of retail flocking into products like VXX because they're securities. They can put them in a securities account. They buy them thinking they're getting a nice spec on volatility. They hear about whatever, VIX cash on CNBC. They buy and hold it for a few months or hopefully not longer than that, but they do it and they get crushed. And that's a huge, huge use case. And that is the reason why they claim they created that VIX up, VIX down to eliminate that contango risk. They didn't do it. I still put the disclaimer in. I don't know if it's possible to do it the way the product trades.
If the realized vol guys can ever get that SPY product going at 30 days to expiration, all right. So if there is a SPY realized vol future at 30 days to expiration, all right, it should trade at the price of the VIX. All right, correct?
Theoretically, yes.
Theoretically, and then that would be the closest thing you could come up with. And then as it gets closer to expiration, it will then, obviously start to actually grind down to realized volatility, which is even lower than VIX usually. And so you might be able to develop a combo of futures that prices, kind of like a lesser version of VXX, but that'll get you close. I actually think the product that is most likely to have success in the vol ETN space that could work would be a VXX4 VSTOXX. VSTOXX futures trade. You could probably run. If you wanted, you could right now. VSTOXX does the equivalent of about 20 to 30 million. It's a call it $100 million base of people trading it. So there are people trading it. I mean, it does the equivalent of a few thousand because they're minis. My understanding is it does the equivalent of multiple thousands of VIX futures a day, which is enough to launch a product. That's kind of where the VIX futures were when VXX launched. And so I think a VXX version of VSTOXX could absolutely be successful.
Well, that would kind of solve the problem we were talking about earlier, because a lot of people think VXX and some other ETFs were kind of the big catalyst that drove a lot of volume back into the futures and, of course, the options. And if that did take off, then, of course, it would make VSTOXX, the mothership itself, more liquid as a result.
It's a little bit of building on each other. So, you need the volume in order to launch the ETN. Then the ETN helps build volume. And then, volume creates volume, really. And so VSTOXX is there. Again, the closest thing we'll ever see to a cash VIX is, one day a month that if those guys can get it launched.
The 30 days out, yes. That magical day.
Yeah, one day a month that will trade like VIX. But you'll be able to create, some sort of future that kind of trades around VIX by, kind of buying and selling different futures contracts similar to the way a VXX might. It will have contango to it, but you would hope that this. I feel like the because it actually is adding in these realized days and isn't moving around. You'll have a much more concrete contango if you build an ETN around that. But like I said, I do think that would be the closest thing, and that would be absolutely will be tradable as a part of VIX.
I wouldn't turn my nose up at that one either. I think
Donald sit there. Implied volatility stinks. It's for idiots. And
He is probably saying that to himself right now as he listens to this.
No,
Yes.
yeah. Hi, Don. But in truth, what's gonna if they get that thing successfully launched, the two will both build in volume, and it will be additive, and I don't think not subtractive.
Yeah,
So,
I would love to see that happen. I would love to see, like I said too, my answer. I think my answer is more theoretical than practical because I don't think it really is possible. As Jared always argued, whenever we argued back and forth about VXX, that there is indeed a time value of money. You can't eliminate that, and so that is the problem. But there are a lot of people being hurt by that VXX product unintentionally, and I would love to see some sort of product come along that could somehow remedy that. Obviously the answer is education and everything else like that, but we can't have all the hundreds of millions of people who trade those products listening to this show as much as I would like that. So there has to be some other solution.
Maybe one of those things, it should be classified as you need to have level 2 or 3 options clearance.
I agree that they should limit access to that. I think that's I don't think all ETFs and ETPs really should be like these crazy inverse ratio things. These should have a little bit more sophistication before you dive into those.
I concur.
So maybe VXX should fall into either that, or they should beat the drum a lot more for that, saying this is really not the product you think it is. Of course, that defeats their marketing, so they don't want to do that. But that's the challenge. If someone could find a way to really do that, that would save a lot of people, I think, a lot of money on a regular basis, and that would be a good thing, I think, in the long run. Since you mentioned VSTOXX, Mark, I think we'll close out on this question from Azon, I'm not sure how they pronounce that, and he or she writes, how does VSTOXX perform relative to VIX? Just as call heavy, similar pops to the upside, etc. Another good question because we have been working VSTOXX more into the rotation here. Maybe I'll have to get some more good flow data for you guys on that. Maybe for the next episode we can parse the skew a little bit more. But I know, Mark, you've kind of been watching VSTOXX a little bit more. What's your take on the near term here? Is it similar flow we're seeing out there, or is it kind of its own beast?
I don't have a good look at the option flow just because it trades overseas, but in terms of the actual futures, they move a lot like VIX. Very similar price action to VIX Futures. So it's a really the big difference is they're smaller than the VIX contract.
Yes, and I remember, if you're looking for some interesting data on this, our buddy Mark Shore over there, he wrote an article called VSTOXX Volatility Behavior When European Equities Rally. Came out in August of last year, but it is one of the few pieces I've seen kind of comparing and contrasting the two, so you can search for that, and maybe that'll help illuminate. It's got some data in there that we don't have time to get to here on the program, but interesting stuff there as well. And there is a lot of data on the correlation. Obviously, as this spread is starting to widen this week, more people are looking at it, so you can probably find some more interesting analysis out there going forward on this, whereas in the past, VSTOXX was kind of the Johnny-come-lately of the vol world. Didn't get a lot of love from an analysis and research perspective. Hopefully, that'll start to change as people are looking farther afield for vol products and trading opportunities. Speaking of looking farther afield, it's time for us to do just that. It's time for us to dive right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, and welcome to the Crystal Ball segment. This is indeed the portion of the program where we look far afield into the murky ether to attempt to determine what's lurking there from a volatility perspective. Mark, it's kind of been a bit of a weird one. A couple weeks ago, we predicted that the Greek thing was really going to materialize, and we were going to see, VIX cash in the 15 handle range or so, probably for an extended period. I think you might have said a 2% pop on the following week. We saw a little bit of a pop in the cash. Then, of course, it came off. And then this past week, we saw it pop a little bit again and then come off. It's kind of been the pop and come off cycle for the Greek crisis. You think we're going to see more of that this week? You think the Greek thing is kind of finally shaking itself out? Where are you falling here this week?
I think we could definitely see it. I think we'll see volatility pump up. We'll probably start seeing buyers on the 25th or 26th next week. For some odd reason, no one's going to buy protection until we start hitting up against that deadline. And then I think we could see VIX go from, the 13, 14 range, maybe up to 15 or 16, maybe as high as 17 buyers that I wouldn't be shocked to see that.
Yeah, I mean, if all the much ballyhooed call paper out there, and a lot of it's July. If that stuff starts to pay off, people are gobbling up into the mid-20s. We saw 26 handles going up for size this past week. So if any of that paper comes to fruition, people are looking for a very near-term pop. Again, we talked earlier in the show about what we think about all the call-heavy love of VIX. That's kind of the nature of the beast. But c'est la vie. Some people do put a lot of stock in that, and if you're one of them, you may think we are poised for a move much higher than the low teens where we're hovering now. Whether that comes in the next week or so, it's up to you. But a lot of vol paper in July saying that may indeed be the case. But unfortunately, it's all the time we have for the crystal ball segments. Also, all the time we have for this episode of Volatility Views. Mark, it's supposed to be a vacation shortened episode. I'm supposed to be on vacation here. Whenever you and I start gabbing about vol, it seems to fill the whole time anyway. Yeah. So let's wrap it up there. But before we go, give our listeners some quick insight. What's cooking, what's moving, what's shaking in the land of the pit that may interest our listeners?
We're going to have our next webinar on July 7th. And it's going to be on calendar trading. So go to optionpit.com/calendar trading. Pretty simple to register. So and everybody remember, calendar is CALENDAR, not DER. Just remember that, folks.
You should probably grab both of those just in case. that is a good URL. I like that. Make it simple for the folks. Just /calendar trading. I'm doing it right now as we speak to check it out. So surf on over there for yourself, listeners.
My ugly mug.
Kick the tires, light the fires, and check it out for yourself. And on behalf of Mark and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing. However you listen to the show, we welcome you. And of course, for sending in such great questions. Keep those coming. We love to have you guys pulling us farther and farther afield into the different esoteric realms of volatility. That's why we do this show. That's why we love to interact with you guys. Keep those coming. And we'll see you next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.